Hi everybody, welcome to your next Excel project. This is the one I refer to as the retirement plan project. If you look in D2L, right now I have 3 files here relevant to the retirement plan project. If you open up the one that says retirement plan Excel problem description, it's a Word document, and this is the description. Why don't you pause the recording and read that for 4 or 5 minutes if you would, please. Okay, what we've got here is this firm called Plan Ahead. They've got a defined contribution to 401k plan. 401k is just the IRS code denoting its tax preferential treatment. And that plan is effective January 1st of 2013 for employees that meet certain criteria. So basically what we have here is a retirement plan that generates its fund from 3 sources. First, contributions from employees' deferrals of their own salary, their own checks, goes into a 401k, this tax-deferred retirement plan. Second, the employer matches those contributions to a certain limit. And then finally, there is a discretionary profit-sharing contribution where the firm takes some excess, hopefully profits, and provides those profits to employees based on some other criteria. So we'll do this Excel project. Basically what we've got here is a financial modeling project, but this is a project that covers all disciplines. This is management and human resources and accounting and finance and personal finance, financial planning. But we'll do this project in 4 phases. First phase is to determine, based on this employer discretionary matching contribution, which employees are eligible for that portion of the retirement plan. Phase 2 will be to calculate how much each employee gets in matching. Phase 3 will be to determine which employees participate in this discretionary profit sharing contribution from the employer. Phase 4, to finalize the project, will then be to determine how much each employee gets from that discretionary profit sharing portion. To determine who is eligible in phase 1 for this first discretionary matching contribution, notice this paragraph here. First, to be able to participate in the matching portion of the plan, employees must be 21 years or older. They must have been employed for 1 year. Notice that there's 2 dates on which we would estimate this eligibility, January 1st or July 1st. So to summarize thus far, in phase 1 we're to evaluate which employees are eligible to participate in this matching component of the retirement plan. To be eligible, those employees must be 21 years of age and have worked for the firm for at least 1 year. This evaluation is done both January 1st and July 1st of the current year, in this case 2013. The rest of the information below here is related to one of the future phases that we'll work on. And in fact, I have the data included on this Word document that we'll use to calculate phase 2 and phase 4 numbers. That content is also available in D2L in an Excel spreadsheet form to assist you in doing calculations and formula assessment once you start to create this Excel spreadsheet. And here is that spreadsheet form of the data. I've also got another file in D2L that is kind of I call it my things to remember for the retirement plan project. Many of these tidbits of advice go a long ways in other Excel projects to get you the most points possible, but the ones that people tend to mess up. But I would strongly encourage you to read this file and heed the advice that I've given you in here. I think it not only benefits my grading efficiency, but it'll help you with Excel modeling projects in the future. Going back to the Excel spreadsheet here, noting that our first task, I'll label it up here, phase 1, is to determine which of these employees over here are eligible for the matching portion of the retirement. So the first task in phase 1 is to make sure they're at least 21 years of age. So I'm going to label that as a subset of phase 1, 21 years, question mark. So in this first column, I may evaluate the age of our employees by comparing their date of birth to a static date. So I'm going to create a couple static dates up here that we can change in the future. So in this column, we're going to evaluate how old each employee is on each of a couple dates. The first date will be January 1st of 2013. Again, remembering that we have to evaluate the employee's age as of a couple points in time in each year. That's January 1st and July 1st. So as I said in the advice file, the suggestion file we'll call it, you need to externalize data. Since I'm going to be comparing the date of birth column over here with some static date, I want to put those static dates outside the data. So the first date I'm going to have is 1/1/2013, and another date is going to be 7/1/2013. So I can come down here and to do that evaluation, hit equal to kick in a formula. The first date I'm trying to evaluate as a comparison, a subtraction in this case, to Michael's birth date. Now that'll simply get me the number of days that Michael has been alive until January 1st of 2013. So I want to put that in parentheses, do a little editing on the fly here, and divide that by the days in the year. Except remember, we have leap years, so that complicates things just a little bit. My approach to deal with leap years is just to take 365.25. Since there's a leap year every fourth year, the average number of days in each year is 365.25 days. And that tells us Michael is 49.66 years of age as of January 1st, 2013. But use your imagination. There are several approaches to calculate how old a person might be as of a specific date. I would ask you not to use the integer function in Excel unless you do some reading on how you make those integers rounded to the nearest day. You'll do the same thing as of July 1st, and then we'll have basically the first half of phase 1 done, in that we have calculated the age of an employee as of a specific date. The second part of phase 1 is to assess whether the employees have worked a year as of January 1, 2013 or July 1st, 2013. So you would do the same type of thing we did with the age, except now you're evaluating whether there's been 365 days since the employee was hired. So I would label those columns, for instance, 1 year work, question mark, and then those same dates, January 1, 2013 and July 1, 2013. Again, evaluating whether it's 1 year of work. Only it changed it when I copied it over, so let's change it back to 1 year of work. Then you might have one last column that essentially asks, is the employee eligible? So we'll say employee eligible, question mark. And then you can do a number of different tests. I would probably do an if-then, where if this condition and this condition was met, then I'm going to proclaim them eligible by writing in the term eligible or putting in yes or tick mark or whatever you want to do to denote that this particular employee is eligible. And again, please do not do any calculations within the confines of this data, because we want to bring the data in for 2014 at some point in the future and have these same calculations over here be done on that particular data. However, if you'd like to freeze panes, you're more than welcome to do that so you can keep track of these employees. You might want to click in this cell right here. If you click on the view portion of the ribbon,
and freeze panes here, then it'll keep my names of the employees kind of in a constant column over there as I scroll to the right. But you can choose to freeze panes at your own discretion. So at the end of the day, I'm going to be evaluating the quality of the answers in this column, though sometimes wrong answers get much of the credit and sometimes correct answers get none of the credit. If somebody evaluates whether Michael meets these two conditions up here simply by hand and then types in yes or no, that will receive no credit. You need to use the full power of Excel and this data set to evaluate whether Michael Kiera on down has met the 21 years of work and the 21 years of age and the 1 year of work requirements. In future phases, I'll give you more hints, but I want to show you where we're headed. This is the Word document that I've kind of highlighted up to illustrate when the text applies to phase 1, phase 2, phase 3, or phase 4, or a combination of phases. So you see the yellow text here applies to phase 1, and the blue portion of the text indicates the phase 2 information. That's when you're going to calculate the amount of the matching contribution from the firm each employee will get. Moving on down, the red portion is the phase 3 information. That's going to tell us which employees qualify for the profit sharing portion of the plan. The green portion then helps us calculate the amount of the profit sharing. And then finally, the magenta light purple portion down here is information that you'll use both for phase 2 and phase 4, wherein the compensation to any one employee cannot exceed $245,000. Now if we go back over to the data, we see that several employees, actually 2 employees, Michael here at $350,000 and Chelsea here at $290,000, both make more than $245,000. When you are working on phase 2 and phase 4, the limit on that compensation recognized by the plan and any calculations you do based on these wages will be limited to $245,000. So good luck on phase 1. I have a due date in the Dropbox of November 3rd, I believe. I may extend that slightly since I was late getting this information out to you. Please feel free to share information with one another. However, I do want individual submissions. There are about 100 ways to do these 4 phases, so I would like to see individual work when it comes to the final submission, but feel free to share tidbits about what works and what doesn't in terms of a lot of if-then analysis is useful in this type of project. Good luck everybody. Let me know if you have any questions. I will create a discussion board to be used exclusively for questions on each phase of the retirement project. Take care. Have a good one.